With over 23 years of experience in the stock market, I'm Anthony Calhoun. Welcome to Simplified Profits, where we like to keep things very, very, very simple in a very complex world and where people overcomplex the market on the daily. So today I want to go over the simple indicators I use to swing trade and beat the market. We're not out here trying to get rich overnight. We're not out here day trading. We're just slow, steady grinding, trying to make congressmen and women type gains every year. And believe it or not, you can compound a lot of wealth very quickly. So let's get at it. Triple Qs is what I got up on the screen here. It is the technology ETF. For those that don't know, ETFs are all we trade. Well, take that back. The majority of what we trade. And we trade the leverage version based on the standard version. Okay, so there's a leverage version for just about every ETF out there. So for the Qs, it's TQ, QQ, and that moves 3 times as much as triple Qs. Okay, so the whole point there is to use leverage to actually give you a huge advantage, and you can do this without even borrowing money. A lot of people talk on leverage and getting rich with leverage, and a lot of people borrow money to do that. Using leverage ETFs, you don't have to borrow money, so you kind of limit the risk. And basically, one of the big things I pay attention to, it's not really big, but it's kind of a big rule for me, is the 200-day moving average. So if something cannot hold the 200-day moving average, I do not want it on my account, in my portfolio. I don't trade it. I don't own it for the long term. And you can see in 2022, so when it dropped under, we actually exited on this triple top up here. We just had a bad feeling about the next pullback crossing under the 200-day, and we sat on cash all of 2022 and just kept putting cash in the account, putting cash to work in other areas outside of the market. But even if you waited that entire year after it broke above the 200-day and pulled back again and started holding it, you would have saved yourself a 20% loss over a year and been able to just stack money instead of your money bleed out. 20% is a lot of money. I mean, you'll turn 10 into 8, 100 into 80. It's nothing to be, obviously that it's gained and broke up since then. But if you were dollar cost averaging, you've probably been all right. But if you would have just started stacking straight cash, locked in your profit there, and then re-entered over once it crossed over the 200-day, it could have saved you from a lot of losses. Okay, if you look back, so in the book Simplified Profits, we have a lot of examples of this. Everything from Tesla to GE to a lot of older stock charts that crossed under the 200-day and did not do well at all. Usually your biggest gains happen when it's over, or biggest losses happen when it's overbought or under the 200-day moving average. So right now we are looking at, like I said, triple Q. It's over the 200-day moving average. So we keep that on our chart, and the stochastic. So if it's over the 200-day moving average, it's pretty healthy stock chart. Highs are getting higher, lows are getting higher. We're looking to make a strategic entry, and our strategic entries are at when the stochastics, okay, that's our other indicator, are oversold. So when it's below this red line right here, that's an indication that's the value's 20. It's an indication it's oversold. Now, sometimes don't come all the way down to being oversold. SMH did right there, I believe, which we'll get to in a minute, but triple Qs didn't. But the 20-day moving average, which we'll get to in a second, which is the middle of the Bollinger Band, did act as a support, and we would have been watching that and probably entered that as a buy, even though we were in SMH, which got oversold. We'll go to in a second. And right now, triple Qs is heading to the oversold position. So this is where we buy, oversold, oversold, overbought. Okay, but we use leverage. So let's look at this on a leverage ETF. Oversold, overbought. You're looking at 18% in 14 days. Now it dropped under the 200-day, but not on the Qs. So we trade based on this chart because the averages and the highs and the lows are going to be a little different. Okay, so we would have bought here. Maybe we bought a couple times, average. Probably would have sold there. We probably would have sold when it was overbought, but still 22%, 7 days. Or no, I'm sorry, 22%, 17 days, still amazing results. You don't have to try to be in these get rich quick overnight stocks. You can literally swing trade the market with leveraged ETFs and crush it. Okay. Now, big thing is cash flow. You don't want to go all the way in on a position, because if it keeps going down, you want to be able to manage that position. I'll give you just kind of rough idea when we're doing now. We entered this here, oversold. Now, I usually don't like trading uranium or commodities at all. I usually stick to these, but the market was so overbought and running. I honestly thought I could swing trade this and have it rally up prior to the market pullback, jump out of this, jump in the market pullback, and just keep moving money and having money print money. Now, sometimes it don't work as you expected, right? We entered here. I expected a good 10% bounce, but no, it dropped as much as 5%. Now, we entered multiple times, and our average right now is 28.60. Now, we're down a little bit, but we got about 80% of our portfolio wrapped up in averaging down. And it looks like it's going to rebound here. All right. So if we're at 28.60, I mean, we can still get a 12% gain if it goes back up to previous highs. And we don't need very much at all for it to catch up and wash out. So how we'll trade that position, I'm not sure. We may, if we're up just a little bit, we may jump out and jump into one of these leverage ETF versions, which we prefer to trade. Or we may hold up for that whole swing trade and lock in, hopefully a 10% gain on 80% of our account. So if we go to SMH, like I was telling you, this is the semiconductor ETF. This was oversold, pretty much oversold here. And we're heading there, okay? So usually these swing trades, the buy to the sell took 20 days, 23 days from when you exited to when you buy again. Usually they can take anywhere from a couple weeks to a couple months, okay? The thing is to have patience and understand these swings are going to happen. You may be watching the market and seeing it go up and go up and go up and like, man, it ain't pulling back. Let me jump in and try to catch some of this. That's called the fear of missing out. Do not jump in for the fear of missing out. That's why I always have some long-term positions. So usually what I ride with is a long-term and income account, long-term investment income account, and then I have a trading account. So if my trading account's cash and, if I locked in profit and the market keeps going up, then I can easily, be patient because I still have my long-term income account going up as well with the market. Now we did start a transparent account, and there's two different versions of Simplified Profits book, one for kind of the long-term investment account, one for the trading account. Now the transparent account I'm kind of doing about 20% long-term positions, and then the rest will be traded on. If you haven't checked out the transparent account, make sure you do. But so far, let me jump back to the point of the video. We got the 200-day moving average and the stochastics. We're not trying to pick the bottom. We're trying to come close to it. And we're trying to keep cash flow available to manage that position. So let's say you got 10K you're trying to put to work. Let's say you got $1,000 you're trying to put to work, or $1 million you're trying to put to work. You trade it based on percentages as if it was $1 million account. So just because you got $1,000, don't think you got to go all the way in on that $1,000 on that position. No, put 20% of it to work on your first buy, and then scale in. Okay, scale in, get you a good average. If it keeps going down, keep your cost average low, and when it comes back up, lock in your profit. But where I find my technical entry is on a bullish chart, oversold. Okay, this is the Bollinger Band. I can't really look at a chart without a Bollinger Band anymore. Doing this for 23 years. Old school trader taught me back in the day. I mean, he's been trading since the 80s. That's kind of the only thing they kind of had to use back then. They would buy at the bottom Bollinger Band, sell at the top, buy at the bottom, and they're really good traders. So I keep the Bollinger Band. When I see it oversold, I'd like to see it touch the bottom Bollinger Band. It don't do that all the time. Sometimes it just touches the 20. Sometimes it'll keep going down through the bottom. You just got to kind of pay attention and have cash flow. Cash flow is a big thing to manage your positions. All right, putting your money to work is great, but it's almost like having an employee working with nobody managing it. You got to be able to manage that money, keep your position average low, and lock in profit when it's time. So as you can see, SPY. So looking at all four of these at this time frame, SMH or triple Qs was the only ones over the 200. That's what we traded. But ladies and gentlemen, it's very simple. So simple. Wrote a book called Simplified Profits and started this channel called Simplified Profits, and I teach it to my son. My son's making his first entry today on triple Qs, which I prefer it to hit the bottom Bollinger Band and oversold, but he just picked up a small position. He just turned 18 last month, opened his first brokerage account, and kind of ready to start swing trading. Now here, he can buy this position. He can average lower 3 more times if need to be. We'll make sure he's going to do okay. But you got to understand when they're young too, emotions, they make a couple bucks or get down a couple bucks. Their emotions can swing. So make sure you teach your kids young about finances, how to put money to work. Also had them just pick up just a position in this for the long term. So make sure they know how to invest their money. Make sure they know a very simple strategy to invest their money. And it could just be buying SPY every time it's oversold. Or you could dollar cost average and buy every week. Whatever you prefer, go at it. This is how I swing trade, and it's very, very simple. I'm out.